see. We are live. What's going on, everybody? Ah, hold on one second. Sorry, having an interesting night technologically here. Uh, there we go. Let's get that tweeted out here. Woo, wow. Well, I hope everybody had a great trading today. What's going on, fellow traders? Okay, so let's just go ahead and jump into it. Let me let me edit this here. Edit these studies. Remove the floor pivots because I have those already pre-programmed in for today. So we're good there. Goodness gracious. Wow. Wow. What a day. Okay. So choppy day. Definitely a choppy day today. So the range, we were pretty range bound today, and it was a Fed minutes day, which is really boring. And then it turned out to be boring after the Fed minutes anyway. So, no new surprises out of it, and it just was a choppy day. So let's just kind of review where we're at. Let me just make sure. Okay, what's going on, guys? All right, cool. So, good. All right, so basically just a quick recap. So here we are on the monthly chart. So why do we look at the monthly chart? We look at it because it's important, because it shows kind of the bigger picture of what's going on, right? Kind of weeds out a lot of noise that we see intraday, and it gives you a focus on kind of the bigger term picture. We've been talking a lot about this a lot with the Dow theory. And how like the trend, and this is really really is a good way of showing which way the trend is going, right? Because it's kind of bigger picture type stuff. So anyway, we had that big move down in December, right? And then we had the Christmas reversal, and then inside month in January, and then we broke to the upside, right, in February, and then gave a spinning top month, and then we broke to the upside again. It tested the middle of the range, and then gave you a hammer month there, and then broke to the upside and gave you a Marubozu month, just about little shadow up top, but very very close, right? So very very bullish bar, and then we pushed. We tried to get to all-time highs, and we did. It tagged it and then came back down, right? And so that is where on the weekly chart we filled the weekly gap, right? And so this is very rare on a weekly chart, extremely rare on a monthly chart, right? Especially to close a month with a gap. But on the weekly, it happens occasionally, and then sometimes they get filled right away, right? As you can see, most of the time, and then sometimes they take a little bit. So this took 1, 2, 3, 4, 5, 6 weeks, right? 5 to 6 weeks for it to actually fill that gap. And so we ended up that week that filled the gap with a spinning top, and then we took it to the downside last week, and then this week we're sort of inside, right? This week too. So you can just kind of tell that we're really just chopping around right now this week, and not a lot of action, right? And it makes sense. Like earnings is kind of winding down a little bit. We haven't had a real, today was just FOMC minutes, right? We haven't had a Fed meeting right this month, and then we have had some pretty crazy action though with we've definitely been seeing a lot of stuff with the China trade, but this week so far it's been pretty calm. So I don't know if it's the calm before a storm, but whatever the case is, we're getting a lot of consolidation, right? And so anytime we get contraction, right? Contraction leads to expansion, and so right now we're getting that contraction, and we'll see if that breaks out one way or the other. If it breaks down, right, we still have this upward trend line here on the monthly chart, but if it breaks up, right, if it breaks out, we could see a break at the cloud, and that could give another push here to at least get close to the all-time highs, right? Newsletter subscribers to the Positive Trends newsletter, are aware of some Elliott wave stuff that we've been looking at that shows this test is possible. We'll see how that ultimately plays out, right? And so you can see today, very choppy day, and we ended up with a very narrow range, well, not super narrow range, but under 15 points doji day, and so a little bit of a southern doji too. So just be careful there on that. Now there was a golden cross here on the daily of the 5 and 10 MA. So this might just be gearing up for a big push to the upside. So we'll have to keep our eyes on that. All intents and purposes, so today's price action, like we saw here, really, really choppy, so really, really tough to trade unless you caught, a couple different things. I think I tweeted out in the private Twitter for newsletter subscribers, about testing these, yesterday's, kind of open range, right, and the low range from yesterday, and then how that served as a kind of support here and push to the upside, support here, push to the upside, broke through here, but it held the weekly pivot level, and this is also provided, every night to Positive Trends newsletter subscribers too. So then a push up there to the top. So even on doji days, you can still make money, but the hardest part, right, is some of this chop that is in between. So even though this is the pushes to the upside were a lot stronger, the pushes to the downside were kind of because we chopped around here, right? So just so you can see here, this was the intraday, kind of downward trend line, and then the break here, activate drawing there, okay? You can see we broke here and then gave a nice hammer bar, which pushed to the upside, but look at that, came back, retested it, right? And then pushed up again. This is very, very choppy behavior, right? And it finally got through the volumetric level and then pushed it, got up to the daily pivot. So to make, less than 10 points, right, on SPX, it was a lot of chop to get there too. So it makes it really difficult on options. So just, something to be aware of there. And then on the bigger picture, chart with the bar charts, right? Quick review. We just kind of see what we've been looking at, all year so far. We had the big channel here through 2018 that kind of held as support, as we started to break to these lows, and it finally broke, and then got those December lows there. And then once we got back into the channel, right, you can see it chopped around a little bit, right, got to the pitchfork global, the macro pitchfork median line, then held it, retested it, and then back up to the midpoint here, and then kind of came back down. So just something to keep an eye on there. Right now we are, like I said, we're kind of contracting right here. Could be forming a triangle. We'll see if we can get a breakout. Looks like it kind of wants to test the downside if you look at the futures right here, but it could be a buy to dip situation and undershoot at the triangle and then a push back to the upside. So still going to require really tactical, ninja tactics, right? So we just have to be careful going forward. It's tough to swing, right? Because even if you have some good bullish setups, if we gap down 13 points tomorrow, it's hard to carry that forward, right? Unless that setup was incredible. So that's what we look for. We only look for incredible setups, right? Especially during these high volatility periods. So, which reminds me, let's take a look at the VIX, and then we'll talk about tonight's stuff. So the VIX, right, has been kind of working its way down. Let's see how it looks on the daily chart here with the candlestick. So it's still been holding this cloud, which is ominous, right? So we have this downward trend line, but again, a break of it, could lead to some more upside, right? So a break of the cloud, it's testing its 50 moving average. So a breakout here tomorrow, right, could test the 200-day and then eventually work its way back up to the upper Bollinger Band. So we just have to be really cautious with the VIX where it is right now. It's kind of at 14. It's kind of springy, right? It looks like it might have a little more in it, right? So and then if not, if it kind of breaks down out of the cloud, then we might start seeing some action to the upside. So so good stuff. So that's that. So let's jump right ahead here and kind of get into the next theorem, right, which is theorem 3 of the of the Dow theory. Sorry, long day. So let's take a look real quick. Let me go back to SPX so we can have that as a reference. And all right, there's that. Good. Just kind of quick run through here. So we go through Dow theory, right? So we're up to theorem 3. And then tomorrow we'll kind of wrap everything up with theorem 4 and putting it all together. So again, what is the purpose of Dow theory? It provides a context for understanding market movement and trend, right? So we've talked about a bunch of that already. And then long story short, the transports lead the industrials, right? So we kind of looked at that as well. So just a real quick review of that, right? So what we do is we go look at the Dow Jones Industrials. So I just pulled the iShares up. It's, you could use the YM and then find it, comparable industrials. But since these are both provided by iShares, which is the same, ETF, provider, we'll use those because they'll at least have some, corresponding significance to them, right, in terms of price. So let's see. So let's go edit studies. Let's go add studies. Add studies, compare with, and then we'll compare with. I wish I had a recent one up here. Compare with, then we'll do the IYT, right? So IYT. So we have the industrials up right now, and then we're gonna superimpose over it the transports, right? So we can see here we had this big peak in the transports and then a quick move down, and that kind of was you can see here this huge move down already happened by 12.7, and by then, right, the industrials kind of came up a little bit and then they went down, right? So you had that big push to the downside there. So you could tell it definitely led that push to the upside, right? And we had a real sharp move here, which is showing like kind of a pretty steep incline here, or ascension of the industrial averages too. So really, really cool technique and something to keep in mind, especially when you're evaluating the potential for future movements, right? So let me remove that. Compare with. Okay, there we go. So that's that. All right. So back to where we are today. Let's work our way back up here to theorem 3. So we talked about the founders. We talked about Charles Dow. We talked about William Peter Hamilton. We talked Robert Rhea, who really, really did the most work in terms of making lots of money off the idea and then publishing the ideas himself. And then let's see. So we went through the hypothesis. We talked about manipulation. So basically, manipulation not being anything necessarily totally sinister, like trying to get people, but definitely using big banks using their money to push price around. And we see it all the time too. We see it with upgrades and downgrades. Like they'll upgrade a stock so they can short it. They'll or so they can get out of it, right? They'll downgrade a stock so they can get a better buying price on it. Things like that. All sorts of shenanigans. So we could put manipulation / shenanigans on that one. Hypothesis 2, averages discount everything. That's basically saying that the market prices in everything, right? So for the most part, right? So, but again, it doesn't necessarily price in. Although it's probably getting a little bit clever with algorithms and self-learning algorithms, stuff like that, in pricing in the Fed, right? So that type of stuff. So today, we just kind of can get a feel of it. We knew today after the Fed there wasn't any big spikes or movement, so you can kind of assume more chop, that type of thing. Hypothesis 3, not infallible. It's not a perfect theory. So for beating the market, but you can use it as an aid, and that's why we're doing this here. So we talked about theorem 1, the big, that trends are important, right? There's the main trend, a secondary trend, which is usually like a pullback, right, or a snapback on a downtrend, and then the third is the daily fluctuation, which we actually like because in today's modern age, right, when this was made back in the early 1900s, late 1800s, right, they didn't have sophisticated internet, computer systems where we could actually take advantage of it on shorter time frames, right? And then yesterday we talked about primary movement, right? In the the broad trend, and we talked about that. We looked at the monthly, and we also talked about there's no method for forecasting the extent of a primary movement. And so today we get to theorem 3, where we talk about primary bear markets. Okay, so a primary bear market is the long downward movement interrupted by important rallies. Okay, so those are spikes to the upside. It is caused by, we could use a D there, various economic ills, and does not terminate until stock prices have thoroughly discounted the worst that is apt to occur. And there are 3 principal phases of a bear market. Okay, so the first represents the abandonment of hopes upon which stocks were purchased at inflated prices. Okay, so the second reflects the selling due to decreased business and earnings, and the third is caused by distressed selling of sound securities, regardless of their value, by those who must find cash market for at least a portion of their assets. And so this is really, really important. Okay, so what we're doing today is we're defining what a bear market is. And so a lot of times when we saw here, let's go to the SPX, so it's easy to track. Looked at it too. We definitely used, if you go back in the old videos, we were kind of tracking this, right? You can see here, if you look at Elliott Wave, right, you can see that maybe here it was coming up to the 38.2% retracement, and if it did that, right, then that means that this was really like a wave, like a sub wave 4, and then it was going to work on a wave 5 down, right? Because wave 4 is going to go to 23.6 or 38.2%. Okay, well, it didn't do that, and then it kind of came up here to 50%, and we're like, okay, well, it could still be a 4, some go to 50%, right? And then it never did, right? And then, but then, for us, we know that's back in the channel, and it's like, oh, maybe it's finding support. But you start looking at these things. Then it went to 61.8%, right? And a lot of times that's a wave 2. So then, people are thinking like, hey, maybe this is a wave 1 down. Maybe this is 61.8% wave 2, and then it's going to really, really push to the downside. And as it turns out, right, we're kind of looking back at it, right? This was really just that secondary movement, right? For now, right? So we'll see how it does up to these levels. Now, we'll talk tomorrow, Theorem 4, we'll talk a little bit more about why it might not be. But in the meantime, we'll just take a look and see why this is, based on these definitions, why this is not a bear market, right? So first of all, let's go to the theorems, right? So let's look. So this is the context of what happened there. So, so the first, of theorem 3 is so we talk about those interrupted by important rallies, right, caused by various economic ills. So we didn't have a lot of economic ills, right? So economic ills are like, bad GDP, bad job numbers, and like all the way down, like there was still like good GDP numbers, and there was good, production numbers, and like, things were, still pretty, and some of the earnings were actually pretty good too, and they were dropping on good earnings. So it was just kind of, an anomaly, right? So, but there really weren't economic ills at the time. So that's something to kind of look at. Now, it does not terminate until the stock prices have thoroughly discounted the worst that is apt to occur. Well, obviously the reversal showed the worst, never happened. And so anyway, there's phases. So the first represents an abandonment of hopes on which stocks were purchased at inflated prices. So an abandonment of hopes. So let's just kind of take a look back here and see where hopes were abandoned, right? Well, I think, people started getting worried. They're like, what's going on here, right? And I definitely got a lot of DMs too saying like, what's happening here? But I wouldn't say there was an abandonment of hopes, right? Because there was still, positive things coming up. There's like share repurchases, blah 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 blah, right? So I mean, there was like, stuff, was coming out. I mean, people were saying like, no, this is good, it's a good buying opportunity, right? So it wasn't really an abandonment of hope. And if you're on FinTwit, right, that everybody's, buy the dip, and sure, a lot of people were getting stopped out and all that stuff, but nobody was abandoning hope. I never really saw anybody being like, this is it, this is over, except for some Elliott wave theorists who are like, oh, this is the beginning of the bear market, right? So, Elliott wave is awesome. It really is. It can really help you if you use it, the right way. But sometimes when you try to use it predictively, there are a lot of things we just don't know until things are actually revealed, right? And there were other clues too. I mean, here, look, you had like a bullish divergence here on the RSI, right? So you had a higher low, right, when things were going down. And so, I mean, just like little things like that, we talk about a lot of this stuff, through our videos, just showing that like, hey, there's no reason to really abandon hope here yet, right? And then certainly the meteoric rise back up, it showed that, that things were still good. There was a lot of good earnings, right? And then, now Apple, like for instance, right, they had announced ahead of time that they were missing on stuff. So things were starting to get a little bit sketchy there, right? But then you have Amazon who like crushed, right? You have like Facebook who just crushed on earnings, right? So we're talking about some really big wins here, and they had J.P. Morgan, right? The financials. I mean, you have all these wins on stuff, so you're not you're not seeing that abandonment of hope, right? So that's one reason you can kind of check, right? So the second is reflects the selling due to decreased business and earnings. Well, we just talked about that, right? There's a lot of these a lot of the big companies are still making big earnings, right? Some outlook is not perfect, and that's affecting it a little bit, but for the most part, right, the companies are still pretty sound, right? It's not like there's like Amazon saying like, oh no, we're losing companies, we got to shut down warehouses and stuff like that. If anything, they're growing, right? And increasing their technology and coming up with new ideas and buying other companies. So I mean, there's still a lot of big economic stuff going on here, right? So so in terms of decreased business, we're really not seeing that. We didn't see that during that last down move. And finally, the third is caused by distressed selling of sound securities, regardless of their value, by those who must find a cash market, or at least a portion of their assets. Well, a lot of stuff was still going down that time, right? So, but in terms of distressed selling, let's take a look and see what we see. So I'm actually going to go to the SPY because you can see, some volume. We'll just, kind of pick a couple sectors. Let's go SPY real quick. Okay, let's see. So you can see there was a lot of buying, right? And then, there's a lot of selling going on. There's a lot of volume, right? But even in some of these big moves down, right? The volume was decreasing, right? So, it was just something interesting, right? And then, we're not seeing as much as much volume was here. So I think a lot of people were selling out of positions. Very possible. We saw some increased volume up here, as we got to these highs, because anybody who held through this down move, right, who knows Dow theory and was like, nothing's really going wrong here, they might want to take, hold on to some of their assets, right, and kind of, take care of that up here, right? So that's why a lot of times we see resistance. Somebody who's holding down here, they got back here, they're like, no, I don't feel like going through that anymore. I'm just going to go ahead and cash out, right? So that's why you see like a lot of resistance at those levels, right? So that's just something to look at, right? So these are the things that we look at when we're trying to evaluate bear markets. Now, if we go back, and let me see how far back I can go here. Let's see if I can go back to 2009. Yeah, so I can kind of go back to 2009. Let me pull up the weekly chart actually, and just take a look, and we'll just compare what happened back in 2009 real quick. So let's go there on the weekly chart. So we have. Wow, it doesn't even go back. All right, well, that's fine. So I'll just increase the days here on the daily. The time. There. Time frame. Wow, it's already been 10 years. Amazing. I just want to take a look and see. Here we go. So this was the 2009 time frame, right? So this is SPY. Let's go to SPX actually. We'll just take a look. So what happened was, right, we'll take more look at this. We'll look at more stuff tomorrow, right? So I just wanted to show you real quick. Okay, so a lot differently, right? So the amount of time here between this move and this move, right, matched what we looked at before. This was like only like 1-2 months, like maybe 2 to 3 months. And we looked at that yesterday when we saw our hypotheses, where we saw our theorems showing that the secondary pullbacks only last a couple months. Well, that's what we had there, right? But we talked about bear markets lasting like a year or more, right? And so what do we have here? We have like, kind of this top back here, in in 2007. Well, we're kind of starting, banks are going out of business and the companies are shutting down and like bailouts are happening, right? This was bad, right? So all the stuff that we saw there, in the theorem, right, was happening at that time, right? So we can see that the first was abandonment of hopes on which stocks were purchased at inflated prices, right? So for the time, right, where this had just had a huge run up. So at the time, a lot of the prices were inflated, right? And I think, prices are probably inflated now too. But it doesn't matter because we're not seeing the other stuff, right? So, and people aren't abandoning hopes. And the second is reflects the selling due to decreased business. We saw tons of decreased business, right? Gas prices were up. Companies were had people were not going to work because it was more expensive to drive to work, right? I mean, this was bad stuff, right? And then there was a lot of distress selling, right? People were starting to dump their stocks because they're like, oh, this is it, this is the end, right? And so, so we saw that as well. And then finally, the third is caused by, and then we saw the distress selling, right? So decreased business, distress selling, and then we saw all that. And then the time period makes sense too. We were seeing a steady decline over the course of a year, actually a year and a half, which is typically a, kind of the run of like a bear market. At least it was, in theory. And so we saw that really happen here. This was different, right? And so these days, this one here, wasn't a bear market. It was just a secondary correction of what we saw, right? And we go back to the monthly chart. We, again, we saw that yesterday that the trend was still up. It was just a pullback, basically the 50 moving average, right? So if we go back to the monthly one more time, right, we'll see what happened here. So you can see this red line right here. That's your 50 moving average, right? This is back 2016, right? Just had a little bit of a secondary pullback, came up, another pullback here, then bounced right off of it really quickly these last couple months, right? Here's your big move to the downside, but look how long the downtrend went. This was a bear market, right? So, and we'll talk more about that, one more definition tomorrow in Theorem 4, and then we'll kind of, that will wrap up our Dow theory. So you can see that it's really helpful and it gives a really big context to the market. So when, you see some down days, oh, this is the bear market. No, it's not until it is, right? Until you can show that it is, right? And it takes time, right? And so, so that's what we look at. So, and sometimes we don't know. Sometimes we don't know in the bear market. Right here, it's like you can say, okay, we're going down. Well, is it done yet? Or is it going down? Is it done yet? Or is it going down? Is it done yet? A lot of times, then at this point, you can be, well, how long has it been? It's been like a year. It's been 2 years. Okay, the bear market's over. Now let's wait for that. All the distress selling, and then once you see all the distress selling, people just dumping for no reason, right? Then you can kind of be like, okay, now it's time for me to go back in, and then you can take advantage of riding the trend all the way up from 600 to over 2,900, right? So that type of deal. So anyway, I hope you guys found that helpful. At this point, if anybody has any questions or chart requests, please feel free to plug those into the chat window, and we'll get to those as soon as possible. And I just want to thank all new newsletter subscribers. Appreciate all your support. I emailed, I know, I just saw that, yeah. So really, really funny. So thank you, everybody. Thank you for your support. So Call Saul, what's going on? Hey, good to see you, man. Whew, more chop today. I wish we could. I wish that some of these swing trade ideas that we have would come to fruition. But sometimes you just have to stand out of the way until the market, can give that good setup that we're looking for. So, but it's better to stay out of trouble, right? MJ, what's going on, man? Good to see you. Good. And Robin, how's it going? Robin, since you're here, we may as well look at QQQ and Diz. And maybe Roku, right? All right, let's see what we got. So the Qs, right, a little bit different than the SPX, right? It's back in the cloud, right? And it kind of has like this shooting star, inverted hammer type feel to it. So we'll watch tomorrow and see how we do. Let's look at the futures right now and see where things are looking. Okay, so looking pretty grim. But at this point, we'll see a break of today's high to the downside could give a move down. It might retest this downward trend line that we're looking at here. Right, so I mean, it could go down to like 178 if it really wanted to, but my guess is like we'll probably gap down. Might quickly fade the gap and then start to work its way to the upside. Now the cloud is a little bit steeper here, which means it has some work to do to try to break out. So I would imagine a cloud breakout tomorrow, but it might start to work its way back up. But if it did, right, then you'd probably see like a little gap fill here and stuff like that. And then Diz, a little bit of a down day today. Ooh, inside day. We love those, right? So inside days, give us a good opportunity to trade a break to the upside or downside. And you guys have heard me talk about VWAP before. So on the VWAP, you go to you can go to your 60 time frame, or you just kind of can trace it on whichever time frame you want, and judge relative strength. And as long as it's above it, right, you can kind of work to the upside and trade a break to the upside, and again vice versa to the downside. So really, really interesting position there with the inside day on Diz. So anyway, Ayaz, what's going on? Good to see you. MJ, Tesla, what happens to the stock if all shorts want to cover on Friday? Well, that would be really good for a lotto on Friday for calls. So, but let's take a look and see. Um, let's see. All right, so here we go. So yeah, wow. All right, so kind of a rough day today. So we talked about yesterday. I liked how it was under the Bollinger Band, the lower Bollinger Band. I like how I was getting some volume coming into it. I like the reversal hammer. I like the constructive day yesterday, but today was not so good. Right, today was not so good. So now it's kind of giving you a momentum shooting star, and it might want to test the low end of this kind of support zone. Right. So let's see. Let's take a look. Let's see what I was seeing. All right, so here's your support here, this 178 right type level, which is in this kind of cluster zone right here. So we'll see if that can hold, if that level can hold. If not, then I don't know, I've got this lower, I think megaphone that I drew a long time ago. We could get below 100 to like 88. They've got a lot of work to do, and I think like Elon was intraday was saying that he's dumping his shares, and or he had to sell some shares to cover like some loans and all that stuff, and is what it is. You know, it's his personal finances and all that stuff, but still, anytime a CEO dumps his shares, kind of in panic, right, you kind of have to worry a little bit, right? You guys get concerned. So it looks like, with all this increased volume, it is still concerned. So just be careful of the downside. But like you said, you have the shorts decide to cover on Friday. They don't want to hold it into the weekend or something like that. And, maybe Elon tweets something on Friday. Yeah, this thing could squeeze like crazy and start filling some gaps. And Tesla can move, which is fun. And it also gave us a 60 anchor for tomorrow too. So keep that in mind. Sindor, what's going on? Good to see you. Let's see. So Apple. Let's take a look. It pulls up here. So here's what I like about Apple. I like how it's testing the low end of the cloud. I know it's breaking down through it, right? So it could get some more push to the downside, right? Which could get kind of nasty, right? It might even want to test. There's an open gap right here at like 172, right? 173, 172. So you gotta watch that. But one thing I do like about it is that the bottom of the cloud can still serve as support, right? And it's got this Fibonacci arc, which could find support on it too. So if the market is strong tomorrow, this is going on the watch list tomorrow, for the game plan. If it holds this level, it could, pop to the upside. It's lots of nice consolidation, and it could really break to the upside if it holds this Fibonacci arc as support. So that is looking very, very interesting on Apple. Sarah, what's going on? Good to see you. Thanks for joining in. Shirley, how are you? Nice to see you. Call Saul. Yeah, let's take a look at all the good stuff here. So we've got. Hold on, I think I saw you say something about bacon. Yeah. Oh yeah, the bacon. Saving your bacon. That's what I try to do. My goodness, but it's tough because even though the market's going down, right? It's like there's not a lot of great short setup, so it's like you don't want to swing anything short, and then there's just so much back. It's just like just sometimes you have to step away, which stinks because we want to make up money every day. We look at the market, right? But that's the market is not obliged to pay us, right? We're only obliged to pay ourselves if we find a setup that is consistent for us, and then we manage our risk well on it, and then can maximize it as much as possible, right? So that's really the key. Well, let's take a look at Xilinx. I know that was on our long radar yesterday, thanks to Harvey bringing it up. And let's see. So we have. Yeah, again, I really, really like this setup yesterday. Right, it was almost like a nice morning star type pattern, and then now it gave us an inside day today. So what I'm going to do is I'm just going to take the alert, which never broke yesterday's highs. I'm going to make that here to give us an alert if we break to the upside on Xilinx. So Xilinx could really do it. Right? I'm really liking it. I'm liking how the lower Bollinger Band here is curling to the upside. Right, I'm just liking this. So let me see. So inside day. And it's an inside day, which we love. So then, and if it doesn't move, then, let me replace that. Sorry, I meant below. I already have the inside day up. There we go. Okay. So, yeah, and of course, if we have another choppy day tomorrow, it might give us a double inside day, which would be like, super setup, right? So that's always great. Let's take a look at Coop. Chicken Coop. Oh, wow, that looks good. Nice topping tail here off of the upper Bollinger Band. It would be nice if RSI was overbought there for us to give us a overbought type reversal situation. But I do like this setup to the downside. That looks pretty bearish. In fact, I like it so much I'm going to add it to the watch list. Right. So let's see. XLNX, and then we'll look at Coop. For a potential short. How's Coop? I don't know if I've traded Coop before. How do the options look on it? Let's take a look and see if they have. Okay, so it only does monthly options and has the volume. Volume's a little blah. Spreads aren't too bad. So this could be interesting if it breaks to the downside. There is a chance that we could look at it. So yeah, so we'll keep an eye on it. Could be interesting. So we'll definitely keep an eye on that one. Okay, good. Let's see what else we got. So BYND. Beyond comprehension. Was it green today? Oh no. Ooh, but it did give you an inside day. This is great too. So a break of to the top side, and again a break to the bottom side could take out the prior day's lows and start to work on some pivots to the downside. So I like that potential momentum inside day to the downside. Momentum, measured move could be interesting. Let's see. Look at our wave count 1, 2. Yeah, I mean it could be still a 1, 2, and eventually work its way to the upside, but we'll see. Let's see how the rest of this price goes. Potential target, first potential would be like 73. If it broke, that 77 to the downside. So it could be interesting to look at that one there. And then, yeah, I know, yeah, it's tough for swing trading. Twitter. Yeah, Twitter had a huge day today, right? Big push out of this, kind of this. We've looked at this before, sort of this pennant, that it's type. Make it right here. So nice push out of that today. Let's just look and see how it looked on the 60s. Why am I over here? Okay. So on the 60s, we have a 60 anchor today. So it could be in play tomorrow morning. So we'll look at that. And then let's see. So we didn't have a 60 anchor yesterday, but we had an inside bar that broke to the upside. So it was just basically, some continuation here. So we opened, we gap down, right? Kind of came to the downside, and then just launched through it once it got back up above it, and then just launched. Look at that move on Twitter. Goodness gracious, incredible move. You just don't see bars like that often, especially on Twitter. Wow, great stuff. So yeah, man, my pleasure. And thanks for being patient. We just had to be patient through all this stuff. So Harvey, what's going on? Sindor, ES is at lows overnight. What do you think of ES? Thank you for asking. So, where is my 5-minute chart? Okay. Oh my goodness, long day. Okay, so let's see. So we have a couple things that we could look at. But I think that right now the most important thing is this downtrend, right? So let's just kind of start up here, go to the lows, find the next pivot that doesn't intersect, right? So here we go. So we have this. So it's downtrending. It's downtrending, pretty fast. Right now it looks like it might be trying to cross over. If anything, it might test, that 2852 level, and we just have to look and see, if we can get through, we can kind of test that throughout the evening. So that's what I'm seeing right now on ES. And then levels on it. Yeah, I mean, you can kind of, let's see. So, I mean, I'll pull up the pivot levels. So let's go studies, edit studies. We'll go pivot, floor pivots. So we'll go there. See what it gives us. Okay. So these are kind of different levels here that we would look at. Right, so it's already gotten below this S1 level, and we'll see this next level that it could try is 2841. Right, if that breaks down, you have a volumetric level here at 2839, and if that breaks down, it might find support at 2836. Anywhere below that, 2826 is kind of like your next big level down. So let's see, how it holds. Those levels. If it gets above 2846 and kind of holds, it could push, and then maybe try to work its way up through the cloud and through that downward trend line through the evening. So it could be very interesting. So Merit Forever, what's going on? So Beyond, we just looked at that. We looked at Tesla a little bit ago. So let's look at Tilray. And again, you know how I feel about Tilray, so DLRY. Let's see. How do you move those? Oh goodness, I am so sorry, guys. Just oxygen, just trying to get some extra oxygen. So wow, so Tilray, goodness gracious session. I know you've been liking this one, and wow, so it really gave a big push today. So incredible move on Tilray, and it held up pretty well, right? They gave that push, kind of held around and held that volumetric level, tested this volumetric level, see if it kind of gives you another push tomorrow. So that could actually be really interesting. Nice one to keep on the radar for sure. Session, I know, yeah. I mean, what a crazy number. The market has a sick sense of humor. Raphael, good evening. Good to see you as always. Session, yeah. Let's take a look at shop. Okay, yeah, shop had another good day too. A little bit better than Tilray. right? But let's take a look and look at the candlesticks. So again, a lot of these big moves today on some of these companies, and then just held. So this is really, really nice. Could be working on like a measured move. So I like that. I guess there was some internet stuff going on, some internet strength. But yeah, this is one of those ones we were looking at recently. So let's see how it did. We had this bull flag here, breakout, kind of give you another bull flag right here, and then just kind of broke out today and hit an all-time high today. So again, you always have to be careful of those all-time highs, but now it's another breakout to the upside could just get more strength. I mean, it's just a super duper strong stock right now. And then same with WD. Again, broke out of the pitchfork, kind of holding these levels. Had inside day yesterday, right, and then that broke to the upside. So that inside day up was worth. Let's see. So the high yesterday was 208, and it hit a high of 210 and 80, so almost 3 points off that inside day break to the upside. So that's why we like to trade those. Just be careful, right? Earnings are coming up in a couple days. OD, what's going on? QCOM here. So here's your orb level, right? Double inside 15. So there's a break to the downside, 69.49 with a push to 68.85. Then some more chop. Your orb level here. It finally broke down there a little bit to the downside. This kind of chopped around. So anytime you have a huge, huge gap down like that, you still look at the 15 orbs. You had a big range right here. You look for those inside bars within that range and try to get a break from one side to the other. So it gives you kind of some stuff there. Yeah, huge, huge stuff on Qualcomm. I mean, it's really goofy too because they were all like the whole time, oh yeah, everything's gonna go through, blah blah blah, and then they had that big gap up recently before earnings, saying that Apple dismissed, and then they've been having all this Huawei and all this other stuff, and they had like more news on it, today, like the judge saying like FTC stuff. Judge rules, violate antitrust laws and all that stuff. So it's just like, you had this huge move to the upside and then blah. So if it does break, right, if it does break to today's lows, it can continue to work its way down to test, this 57 level. So that's a good level to keep in mind. Session, what's going on? So Meli, let's see, Mercado Libre. Wow, kind of a topping tail today. It didn't take out the prior highs today, so this might just be short-lived. I mean, it might kind of come down and retest that 529 level, but again, it might continue to chop, and then finally a break above those highs today could work back up to all-time highs. So pretty interesting there. Jamie, what's going on? Let's see what we got. So we've got FDX. Nice. So a little FedEx. Let's see how that's looking. Breaking down. Kind of interesting stuff. I mean, it's still working its way down. I mean, this has been a tough one to count in terms of wave counts because it's just, again, this thing, you can't really count it until the waves are over. So let me, I can actually activate this and still keep that as a wave 4. Wave 5. Wave 5 could probably get down here. We'll remove that. So that's 3 of 3, and then it could kind of come back up here. And then work its way down to wave 3 of 3. So we'll see. We'll see if we can get down there. It is possible that it can continue to work its way down. So it might, kind of come down here to like 130s, and then back up to 170s, and then finally back down to like 112. So we'll see. We've got earnings coming up, which could dictate some things too. So but keep in mind, RSI is a little bit oversold, right? So just kind of watch and see how this behaves here. If it pushes to the downside and then the RSI stays higher than this one, you could have some bullish divergence on that. So for a potential push to the upside. So Robin, thank you so much. You're awesome too. It's great. Yep, you like the cues and is. So that's good. Hopefully that was helpful. Landon, what's going on? Landon, I sent you an email a little bit ago. If you could check that, just check that out. So I couldn't believe that was pretty odd. But anyway, so let's take a look. Amazon. Okay, yeah, so Amazon is interesting. Amazon gave us an inside day today, so that's another one to keep an eye on, right? That'll definitely give us some clues into tomorrow. Keep in mind, oh, goodness. That's why it's so important to watch those futures, right, to see what's going on, right? So we might be gapping down. I'm just going to go back to ES. Amazon is highly weighted, right, on the ES. It's like the number 1. Apple is number 2. So we'll watch the futures as it goes throughout the night, and we'll see what happens, right? Because it might chop down. The cloud might kind of end up around here, and then somewhere around the open, right? We're breaking out of the cloud, even though we're like massively down. So you can see like a real negative number, but we're breaking out. And at that point, Amazon, they're probably gapping Amazon down. So let's go to Amazon. And then then the market starts breaking out and Amazon's gapping down, and that's when you want to get in to try to, and then it's very controlled, right? Because you can keep your stops below the low of the day when it starts reversing. So if we stop down here, if we open up down here, we could try to trade through the range of the day into the upside. So that is a nice strategy to look at. So with Amazon inside day, and then Google. Not quite an inside day, a little bit of a topping tail, but I kind of drew this. Oh goodness, where did that go? Kind of drew this downward trend line right from this all-time high. It was an all-time high, right? Yeah. All-time high, and then they had the gap down into earnings. And then you have this downward trend test. It's testing again. So it needs to do something to try to break out here. If not, all it's doing is retesting the trend line. It could work its way back down again to that 1110 type level. So. Session, yeah, LOGM, log me in. Looking pretty rough. Still below the pitchfork, still below volumetric resistance. So at this point, it's like, I don't want to be here. Maybe it wants to test down here, right? So log me in is a little bit of a rough one. Let's take a look at ESTC. Elastic. NVCom. Nice. Take a look. It's uptrending. You can go here. As long as it maintains the uptrend, it's holding on these volumetric levels. It's got earnings coming up in a couple weeks. So just see if it, holds that and possibly pops to the upside. And then CRM. How's CRM doing? That's a great question. So actually in an update today, CRM is really, really tough to trade. It's in this congestion zone. It's below the congestion zone. It is very, very tough to trade. So if it can break out above it, then you might get a push to the upside, right? So if it can get, kind of above this 160 level, you might get a little test of that 166. And then it might try to all-time highs, right? It might try to test those highs. But it's really, really been hanging out in this zone for a long time. So, is it waiting for earnings? Perhaps, right? It's only in a couple weeks. So something to think about there. Shirley, what's going on? Let's take a look at AbbVie. Okay, looking good. It's starting to break out through that downward trend line that we looked at the other day. So that is a great thing. And that's your key. So you had your confirmation. It started to get above it, and it closed above it too. So that is a great trade. So I think this look good. Guys, this looks really, really good. AEP. Nice push. Again, just watch out for the top of the channel. Right, because it may test that and kind of come back down. So, but if it can get above it and stay above it, then yeah, I think levels are good. PFE, oh yeah, you got some good ones here. So PFE, it's been a little bit on our radar for newsletter subscribers. We like to look at the Dow stuff. It's got back in the pitchfork, right, and looking pretty good. If it can hold that level, might retest it and then work its way back to the upside. MEK, a little bit of chop. I wouldn't even touch this one personally. So really, really hard to see anything on this. Just a bunch of blah through the. If it could go down, it could test this $10.46 levels. It could kind of work its way. It just stay choppy. Or go its way up to that 16 level. So, just something to take a look at there. UAA. Did we get earnings on them yet? Yeah, we did. Yeah, and they were not so stellar, but it is working its way up. So you do have these levels to look at here. This is kind of in this box, right? So it has to kind of, it could come up, could come down, and then retest its way to the outside. So, but yeah, it's got to get out of this box for sure. And then VIG. Okay, cool. So this here, there. Yep, so Vanguard ETF. So just make sure it holds this trend line, and then you're looking good. So good stuff. Raphael, what's going on? Let's take a look at Dry. Or is it Darden? Let's see. Yeah, so Darden's pretty good. We talked about this in the newsletter not too long ago. It had that pennant there. It kind of broke to the upside, came back down, tested those levels, and it's working its way back up. Big channel, right? Got a big trend channel. It's working up, right? Up, 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 up. right? So that's it. Just have to keep that in mind, right? And here it even broke out of the channel, tried, and then came back in. So you've got to be real careful with this one. Plus the options aren't really good on it, so I usually kind of just stay away from it. So, but yeah, nice chart though. BLDP, Shirley. Snuck another one in there, or is this someone was competing for your real estate? Yeah, so just be careful here. You're right, approaching the volumetric resistance. You got a pivot level right here. But if you can get above that, or if you can get above that $4.90, then it can start working its way up. Try to get over the $6 level, right? Brian, what's going on? What do I think Amazon has been so weak? Why? Well, apparently, today there was some news on it about like an acquisition that they were looking at doing. I typed in weak. Oh my goodness. There's an acquisition that was kind of in the works, and then like kind of their big investors and all that stuff were like the client deal. Let me see what the news says here. Shareholders reject facial recognition ban. Stuff like that. So there's a lot of stuff kind of going on with it. But yeah, it is definitely consolidating, right? Which would imply that it's going to move again soon, right? So the inside day is pretty significant, right? Because that could certainly break one way or the other. And the range of the day today was only 20 points on Amazon. That's pretty good. Let's see how narrow that range was relatively. So 20 points. The most narrow range day since then was 25. Back here, 11, right? So this is the narrowest range day it's had since April 18th, so over a month. And it's an inside day, right? So you can see here, this is almost an inside day right here. I think it was 1860.44. Yeah, so not quite an inside day, but you can see the big range that it had after that. Right, so that's something to consider. Now, it might give us a double inside day, and then after that, it should really move. So, but yeah, there's some stuff going on with it, I would have to imagine. So it seemed like it was back in play for a little bit, had some real nice moves, and now it's just kind of paused out a little bit. I think there's some stuff going on internally, where they're like looking at buying some things in the facial recognition app and some other stuff. So just have to wait. They might come out with some news or something like that gets it going again. Ayaz, is it my connection or is everyone else having issues with the clarity of the feed? Good question, Ayaz. I'm not sure. Yeah, I mean, sometimes I have like a little bit slow connection. I'm really, really sorry. But some people say that if you click on the settings and you go to, so my auto on it is 144 points, which is looking pretty bad. But if you put it to like HD or 480, usually it's a little bit better. So hopefully that helps. And sorry guys, sorry if it's a little laggy, but it is free. But yeah, I do need to eventually upgrade my internet and on my computer too. So Harvey, no problem, my pleasure. Robin, have a good night and thank you. Thanks for tuning in. Sarah, thank you. Brian, thank you. Raphael, thank you. Thank you everybody so much for your support. Thank you to all newsletter subscribers. Really enjoying. Okay, good. That's awesome. Yeah. So. Thank you everybody. We've been having a lot of fun in the private Twitter stream for newsletter subscribers, and the newsletter, of course, is gives us a great perspective and helps us stay on top of the market. So thank you everybody for your support. Thank you for tuning in tonight. Everybody, remember your risk first. So you can stay safe and stay in the game. And I'll talk to you guys tomorrow. Thank you so much, and have an awesome night. And I'll talk to you guys soon.